What is up, my friends? Welcome back to the channel. In this channel, what I want to cover is something I think is really important, and that is what to do with your credit right now. Now, I've been shooting videos on credit, my own personal history and my own journey to rebuild my credit after not taking it serious through my 20s, doing a bankruptcy in 2010, I think, even though I shouldn't have done that at all. But it's been a long road back, and unfortunately there is a lot of crap information out there. It just seems like everyone's doing a credit repair or some sort of program or something like that in and around this area of something that's really important. Now, unfortunately, with what we're dealing with in the United States and Canada and anywhere else that deals with credit is, you're dealing with Corona right now. So the game has changed a little bit, and that's what I want to cover in this video. Some things that I've noticed with people that I help and people in my private community. But first off, there was a video that I did, which I'm looking at it right now, called Rebuild Your Credit Step by Step. I shot and uploaded that December 21st, 2019. You should have probably been watching that video, and it gets views and spam every single day. So there's always people spamming, robots and stuff to go and this guy helped me with my credit type offer, blah, blah, blah. But the point is that, I was talking about this Q4 of last year when you could have done something. And unfortunately, the best time to do something was back then. It's like that saying goes, the best time to plant a tree is, 20 years ago or today. So let's stop talking about, the past and you should have been doing it up till now. Unfortunately, this isn't the first video you've watched about this topic. You know it and I know it. So you've probably watched plenty of other videos, and you're probably pretty desperate to get a fix right now. There's a couple different ways you can go about doing this, but it really boils down to the basics now, because right now, even though you could try to do this, you're not going to have much success. You're not going to have much success getting new cards. Right now, everyone's tightened up. Discover, MasterCard, Discover, American Express, Navy, Fed, all the other big ones have all tightened up. So what they're going to ask for, just so you know, if you want to go get a credit card today, what they're going to be looking for is they're going to be looking for you to not be in the average to low, first off. And even a brand like Navy Fed that looks at DTI, debt to income ratio, which most other banks do not look at, which is why you see a 19-year-old kid get a $20,000 Navy Fed credit card. Well, that was last year pre-Corona, okay? So pre-Corona, post-Corona is going to be a very different game. And the reason why he was able to get that is because he had no debt. So DTI, debt to income ratio, worked to the advantage of somebody who had brand new credit and was just building their credit. Somebody who's got a plethora of credit cards and they're all over 60% utilization, you are going to have a very hard time getting new credit cards right now. I would assume you won't get any new credit cards with anything over 30% debt to income ratio, but utilization. But what they want to see, and the ideal percentage, is 9%. 9% utilization is like perfect. Coincidentally, you'll also probably have a pretty high score at this point, because even if you're sitting at 60-70% utilization right now and you go to a clean sweep and pay all your cards down to 9% tomorrow, next statement day kicks in, your credit score goes through the roof. Probably somewhere between 50 to 90 points just from that right there. So you're not going to really be able to go out and get new cards right now. You will be able to go out and still get things like what I bring up in the past video. Your My Jeweler Club $5,000 line of credit, which costs $100 every year to renew. And the first time you do have to buy something, so you got to go buy a crappy watch for 150 bucks. It's overpriced, it's garbage. Everybody knows it. But that's going to show another $5,000 line of credit on your account. So it's going to stretch your usage versus total allocation of credit. That's very important right now. And if you want to get an instant boost on your credit score, that's what works, okay? This is very simple stuff. Some of the other ones I don't really know about. New Coast Direct, I still believe is good to go, even though it only reports on TransUnion and Equifax. The My Jeweler Club is probably the best one by far. I think it's still guaranteed approval. They will do a hard pull on your credit, Experian, but again, it's going to give you $5,000 of stretch basically on your total amount of credit. Okay, that's something you could still do right now. The other thing you could do right now, especially if your score is taking a hit and you're down in the dumps, maybe you got your mortgage in forbearance, it's showing up in different ways on people's personal credit score so far, even though they're not supposed to be reporting it, as well as the student debt. Doesn't matter, they still are. And so the other thing that you could do is go in and try and get credit limit increases. Credit limit increases, usually you can go and get one every 6 months. Now, when times were good, banks like Discover, Capital One, Amex, they would just automatically be giving you credit limit increases. Some of them worked really oddly than others. Like Citibank and Discover were pretty interesting to me because through 2020, well, 2019, 2020, how Discover and Citibank would do it is if I went out and ran up my credit card and then paid it all down and then ran it up again, they were more likely to give me an increase. I don't really know why that's true, but they wanted to see big swings, big usage, and most credit cards, for them to be able to give you a credit limit increase, they want to see usage. So even for the guy who's sitting pretty right now, he's got a really high credit score, and he barely uses his credit cards, he's going to have the same struggles going and getting a credit limit increase as somebody who's got a really low credit score and they're maxing out their card every single month. Just because, again, what's really important right now to the banks when they tighten up, which this always happens, happened in 2008, happened in 2001, it's happening right now, is that they want to see that you're using it. That doesn't guarantee that you're going to get the credit limit increase, the CLI, but again, it helps. So the first thing you should do is try and figure out where can I stretch and get a bigger amount of total credit. And then how can you're not going to get credit cards. So the things like My Jeweler Club, and then the other one is Self Lender. I'll have links below. Yes, they're going to be affiliate links as they usually are. That just helps support me and the channel. Self Lender is another one that I still actively have. It's like basically a CD. So you're paying into it and they pay back out at the end of the term. You can get a credit card with them, but it's a 24% APR. And it's opened up as another line of credit on your credit report. I don't know why you would do that. You're paying 24% on your own money. Just let the CD build. It shows up as an installment loan on your credit report, which gives you diversity as well if you don't have anything like that on your credit report. And yeah, just let that thing run. I think it's like $500 or something like that. I think mine's gonna end this year, but yeah, I still have that from when I was rebuilding. Self Lender, My Jeweler Club, two great things to add into the mix, okay? Going out and trying to get approved for all these crappy cards, these Premier banks, these Merrick Bank, Maverick Bank, all of those that you always see suggested in the Credit Karma suggestion engine and a lot of these other sites. You'll see them on Experian too. Those are mostly garbage. Do not go with those. Destiny is a new one, which is the same company that has many others. I think it's First Bank that runs that one, or First Premier Bank. But yeah, a lot of these are just not good, okay? And I shot an exclusive video for free and paid newsletter members last year. That information is still good, so you can subscribe for free with your email below, and you can access that older email still. So yeah, you want to increase total credit available, and you want to try and get a CLI or credit limit increase on anything. And then let's talk about paying stuff down and like really what should be the strategy. There's two different ways to go about it. Is you either tackle the highest interest card first and try and pay that thing off, or you just try and chip away at all the cards, bringing all the totals down. It's just going to depend on how many cards you got. Are they all maxed out? What's their current usage sitting at? And go from there, right? But if you got one that you pay $200 on that and we pull it back down into 20% or 30% utilization, and it's also a high interest card, well then that's a no-brainer. So again, it's gonna differ based on your situation, but we want to start paying down extra, and we either take one of two approaches. We pay down the high interest card first, or the card we don't like, or the lowest balance card, like let's say it's a $500 card or something like that. That's going to be easier to wipe out than a $15,000 card, right? So however you want to kind of chop it down based on those variables is up to you, but you want to be paying extra. Now, if you have to pull from quality of life, stop going and getting to Starbucks, stop going and doing well, you're not doing movie night, but going and doing dinners and eating out excessively. Cut that back so that we can pay, instead of a $40 minimum payment, let's pay $150. Let's pay double that. Let's pay $80. Let's pay $100. You know as well as I do, paying the minimum payment, it will take the longest amount of time to pay it off. So you need to start getting aggressive about paying those things off. And as the balances come down, score starts to go up. Now, because most people are usually paying balances down slow and it happens over time, you notice the score going up over time. But what this represents overall is a big jump. I mean, this could be hundreds of points depending on where you are. Like if you're at the low end of the credit score spectrum, this will be hundreds of points for you. You know, you'll jump from the 4s to the 6s to the 7s. Okay, and before you know it, you'll be well over 700 credit score. So when things get good again, and in Q2, let's hope, of 2021, you'll be in good shape to go back to the banks and get new credit lines and get new credit limit increases, etc. But yeah, you definitely want to be setting yourself up now. What we can do now, what we can focus on now, is preparing for when things get ideal again for somebody with, you know, in the low to good credit score, right? Yeah, and that's it. I mean, we passed the sweet spot. I was yelling from the rooftops that the sweet spot was back then, and that it's a good time to get new lines of credit. Again, depending on where you were, you should probably go and reevaluate what you were thinking. You know, you saw these videos, you know, you didn't act on it. Well, now we're in a different scenario. We're in a completely different spot. And the best things you can be doing is just that, is just trying to pay down debt, getting things prepared, getting your credit profile ready for when things get good again. But don't go expecting sweet bonuses right now and the best possible rates. All that's gone for now. A lot of the bonus programs are on hold. Like I said, the qualifications for what they're looking for, as I mentioned, they're going to be looking for 2 years of bank statements and of work history. They're going to be looking for a lot of additional information just to get you approved for a credit card right now. So what's happening with most banks is they're going into a manual review process, and they're asking for anywhere between 3 to 6 months of bank statements and 2 years of work history pay stubs. So unless you've got that ready to go, and you should have all that in a folder prepared when you start to get, start to blitz out and try and get more credit lines and more credit accounts, unless you've got that ready and it's looking good and it backs up the numbers that you're saying that you make per year, then don't even bother, because in any little stipulation, any little discrepancy, and they are going to cancel the application for most big banks, like your American Express, your Navy Fed. I don't know if Penn Fed and kind of those more of the other military branch banks do this or not, but I know the big ones do, Discover, etc. They will cancel the application and deny you based on discrepancies that they find. So just make sure all the numbers line up. Make sure that you got 2 years of bank statements, pay stubs ready to go, and 3 to 6 months of bank statements, and everything's looking good. You know, you don't want overdrafts. You want the numbers to line up with what you're saying you make per year, and that's it. And basically, we just get everything ready and prepare for when it's ideal again for people to go out and get more credit limit. Okay, that's all I got for you. If you like this video, thumbs up. Comment below if you got something to say, or if you just want to talk about your history and your journey with rebuilding your credit. It is a very interesting and very challenging game at times, but hopefully a video like this helps you out. And if you think this will help somebody, share it. You know the deal. Subscribe, hit the bell notification if you're not already. Help us get the video up in the YouTube algorithms. That's it for now. Okay, see ya.